so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers because we asked the question, when will the housing market crash? Now, if you're like me sitting on the sidelines renting, you're probably watching every single day to find the house that you love or the home of your dreams. Just find it, but also find it at a good deal. Now, in order to really understand what is going on right now, we first have to understand that the 2008 housing market crash and the 2008 housing market, although some similar characteristics, was much different than our housing market in 2022. In 2008, essentially the housing market crashed because there was an abundance of inventory topped with really loose and horrible restrictions for lending standards, which essentially means that anyone back in the day could get a loan. But you fast forward to today, in 2022, we have historically low inventory and historically high demand, which essentially is creating a housing market bubble. Now, to really dive into this question, we have to really dig in to supply and demand and all of the factors that are essentially increasing supply and decreasing demand. So really what we're going to go into is we're going to go through many graphs today, and I'm going to try to answer the question of when the housing market will crash, but also I also want to dig into my opinion on why I think it's going to be a crash versus a cool down. I really feel like it's going to be more of a crash versus a cool down because of all of the multiple years of accelerated equity growth. I think it was a lot too quick and a lot too much as far as the equity growth. Essentially, what that has done is messed up the fundamentals of the market, messed up the fundamentals of equity growth. That topped with the recession, I just don't feel like it's going to be a cool down. Now, we're going to really dig in, like I said, to the supply, and then we're going to go into demand. So the first thing we're going to do is cover three things when it comes to supply. Number one, resale listings. Okay, so we're going to go over the resale listings. Number two, we're going to go into new home builders. And then number three, we're going to go into foreclosures, which are the three main sources of inventory coming into our housing market. Now, before I forget, you guys, remember, I'm not a financial advisor. I'm an opinion sharer, realtor, and also a loan officer in Texas. If you can, like this video, you guys, subscribe to my channel if you haven't, and as always, comment. You have no idea how many people you're helping. Now, we're going to start with taking a look at resale homes. Now, I've had many people comment on my channel about how a lot less people are going to sell because they're locked in at super low interest rates. First of all, what I want to say, guys, not everyone locked in at a super low interest rate. Some of the people that anticipated selling within 2 to 3 years essentially didn't refinance into lower rates because they had planned on selling. And whenever you refinance, as you know, you start the loan amortization over again and you have to pay thousands of dollars of closing costs. So I believe, although a lot of people have low interest rates, I don't think that's going to affect the listings too much. But nevertheless, let's look at the historical data on listings. And what we're going to do is we're going to look at Fred economic data graphs right now. Take a look at this. Now, this is home inventory, new listing counts in the United States. You guys, this is a 10-year span. And really what I want to show you is the peaks, okay? This is essentially when new listings come to the market. Now, as you see, the worst time for listings is in December, okay? Historically, is it in December or COVID, right? Or COVID lockdown. So December or COVID lockdown, right? So historically, we should have low inventory right now. But if you look right here, inventory is surging. Okay. The reason why it's surging, resale homes are surging, is because we're entering into the historical months of the most inventory. And if you look, you guys, at the peaks here, the peaks are usually in May and June. Look at this, May, June. Look at May here, the peak May here. This was COVID. This really doesn't count, but the peak is essentially in June here. Look at this, May and June here, and it's already going up in March. So you guys, essentially what I'm saying is from this point forward, we're about to enter historically the strongest months of listing volume coming back onto the market. So as we go into spring, as we go into summer, we're going to see a lot more inventory hit the market as far as resale homes. So that's going to be a surge of inventory there alone. Now let's move on to the next thing, which is new home builders. Now there's a record amount of new build permits that have been pulled in 2021, and that topped with what I believe are going to be a lot of canceled contracts, because essentially when the builders start building and they get someone under contract, that could take anywhere from 6 to 12 months. Now, as you guys know, if they got anyone under contract at the end of 2021 or even in 2022, your rates are way higher, right? And because people's rates are way higher, they may not be able to qualify for loans anymore, because what I've noticed is most of these buyers are maxing out their debt to income ratio. So with the surge of interest rates, that may essentially price them out of loan qualification. But let's take a look at exactly how many new build permits have been pulled and essentially what we can expect as far as an inventory surge in 2022. Take a look at this graph. Okay, guys, again, Fed economic data, and this is a 10-year graph, and this is in the thousands of units. So as you can see here, really what happened, you guys, the reason for the short inventory is COVID lockdown, okay? If it wasn't for the lockdowns and the stimulus and cheap money, we wouldn't have this inventory problem, in my opinion. But as you can see, we're over here. So new building permits are 1.8 million. So 1.8 million permits have been pulled to start construction on new houses. That is a record amount of permits being pulled. So I suspect, you guys, that you're going to start seeing throughout the year of 2022 moving forward, you're going to see a surge of new home builds being completed. That topped with the possibility that all the people they have already had under contract are essentially going to get declined. Now, here's the thing with new home builders. We're going to get a surge of inventory, yes, but new home builders are very smart. They don't want to just build and build and build and throw it onto the market, because essentially of what has happened throughout the history of the housing market, essentially when they overbuild, they go out of business. So they kind of have to be careful, in other words. So one might say that, why aren't new builders building more? And the reason is, this isn't the first show they've been to. They know that if they overbuild, the market's going to shift. And if they overbuild and they have to hold their spec homes, again, they could go out of business. New home builders have to sell their houses right away. But we are fixing not only to get a surge in inventory from relisting homes, but also we're going to get a surge of inventory for new build homes in 2022. Now let's look at the third thing right now, which are foreclosures. Now, essentially with foreclosures, the ban has now been lifted. And I think that foreclosures were banned for almost 2 years. That has stopped. So we're going to get an influx of inventory from foreclosures, but not as many as you might think right away. And that is because that the people that were in foreclosures essentially also got equity surges. So now that equity surges are kind of out, we're going to start seeing, in my mind, we're going to start seeing a huge influx of foreclosures and defaults the later and later that we get into 2022 and in 2023. I think that the problem is going to spiral out of control. But at first, I think that the problem is going to be hidden because of the sudden equity growth. So a lot of those people can just sell or possibly even refinance or do a loan modification. But take a look at these numbers from Black Knight right now. So essentially you can see here, let's start on the bottom here. So you see for the last year, here's the foreclosure starts, this bottom row here. Now it's been very, very low. All of these foreclosure starts have been low. And then the ban got lifted. We entered January with 32,000 foreclosure starts. And then February, 25,000 foreclosure starts. So that's a lot more coming to the market comparatively. And what I'm saying, you guys, is this number here and here is essentially going to skyrocket, because those numbers are actually pretty low, even though we're getting more inventory from foreclosures. It takes time for foreclosures to begin and end the process. And that topped with, again, a lot of people have equity. So the fact that there's 32,000 in January and then another 25,000 people in February goes to show that even with surging equity, people are still going into foreclosure. So again, what I am saying is watch out for that data. I suspect foreclosures are going to surge. So those are our three areas, you guys, of inventory increase. We have resale homes. We're going to have historic resale listings coming back to the market in these months, which historically is May, June, July, when we're going to have the influx, but also record number of new building permits being pulled. So we're going to get a surge of inventory from new home builders. Plus, we're going to get a surge of inventory from foreclosures. So those are the three main areas. And we have a tremendous amount of pressure on all signs of inventory now going up. Although right now we have historically low inventory, but these are all forward-thinking indicators, right? So that is why I'm saying supplies are going to shoot through the roof. Now, what we're going to do is take a look at demand. Now, what I've done is I've broken the demand into three separate categories. Number one, purchasing power. Number two, investor demand. And number three, fear of missing out. Now, as we move into 2022, all of the demands that I have just mentioned, those three categories, they're going to get destroyed. They're constantly under attack from various elements. So not only are we getting that surge of supplies and inventory, we have been crippled as far as demand. So the first thing we're going to cover right now is purchasing power. Now, purchasing power has been absolutely rocked by these surge in interest rates. And here's the thing, you guys, the rates right now are only at pre-pandemic levels. The problem is essentially because they have been risen so quickly, it's a rug pull. It was not a gradual surge. It was a massive, virtually overnight surge in interest rates, which again is crippling to purchasing power. It is definitely going to hurt most Americans with the interest rate surge unless you're a cash buyer. But I want you guys to take a look at this Fred economic data graph right now on 30-year fixed rate mortgages. Now, as you can see here, you guys, this is a graph of only the last 5 years. And you can see coming from about December 23rd of 2021 till right now, rates have shot up significantly, right? Almost 2%, but 172 basis points, which essentially means in 3 months, you guys. So from here to here, right? From here to here. And look, here's pre-pandemic rates, okay? Not really even at 5%. So you guys, first thing I want to say is in 3 months, essentially 17% of purchasing power is gone. Think about that. In 3 months, 17% purchasing power wiped out. That is substantial for first-time home buyers and basically home buyers that barely qualified based on debt-to-income ratio. But not only that, you guys, I believe going into 2022, because I listen to the Federal Reserve, rates are only going to surge higher. And I also believe that rates are going to go higher than they were pre-pandemic. So I believe as we go to the end of this year, we're going to start seeing 6%, right? Possibly mid to high 6% towards the end of this year. But again, you guys, I'm not afraid of that because I'm always telling you it's better to pay a higher interest rate on a house than pay too much money for that house. For so many reasons, that's a topic for another video, but better to have a high rate. Just remember that. So this sudden surge has essentially crippled a lot of these normal buyers, and they have essentially been priced out of the market until house prices go back down. So the second thing I want to go into now is investor demand. Now, I've read several articles that has essentially said that roughly 25% of the homes purchased were from investors. That is so bonkers astonishing to me. 1 out of every 4 homes, and again, this is depending on the area. Some metro areas, 1 out of every 3 houses went to investors. But we have to look at investor demand because 25%, quite frankly, is a massive piece of the pie that is going to investors. So what I am saying is moving into 2022, we're going to have a lot less flippers. It's not going to be as profitable for flippers to get back into our market because we're not going to have that massive double-digit year over year equity growth. So quite frankly, they're not going to even be able to flip. Plus, the people that are holding to do rentals and mom and pop shops and small time investors, quite frankly, also know that houses right now are overpriced. So I believe that those investors that hold and rent are also going to sit out and wait for a housing market correction. Now, take a look at this graph right now from CoreLogic. Now, this is share of investor purchases resold within 6 months. So essentially, this is flip investor demand. Now, as you can see, it has been decreasing since last year sharply. It went up to about 18%, but it has gone down sharply to about 13.5% to 13.8%. So as you can see, the investor demand is already going down for flippers. But also look at this graph. This is a share of home purchases made by investors by month. Now look at this. It's spiked at the end of 2021 to 26.9% of homes purchased by investors. And look at it, it's already free falling. Okay. It's not pre-pandemic levels at 16%, but it is free falling. And I suspect that fast forward to today in March, it may be down to pre-pandemic levels. So essentially, you guys, you're already seeing with data, right? You're already seeing with official data that investor demand is essentially tanking right now for many, many reasons, being overpriced and the lack of equity growth. So we are going to get not only way less demand from first-time home buyers and people that were barely able to qualify for home loans, but we're also going to get way less demand for investors because typically investors don't make money by losing money, right? Do you see what I'm saying here? So those are two areas. Now we're going to go into the third area right now, which is the emotion or fear of missing out. Now, here's the thing with the fear of missing out. It was red hot. You cannot underestimate the emotion of people. But I think that going into 2022, now that rates have gone up, right? So there's this fear, I want to get a house before rates go up or whatever is going on in people's minds. That's going to start leaving our market in 2022 because the rates have already gone up. And as more and more inventory comes onto the market, there's going to be less overbidding and less multiple offers. So as we go forward, quite frankly, I believe the fear is actually going to shift to the sellers. Now, the sellers are going to have a potential fear of missing out, of not selling. I think a lot of people are going to ask themselves, did I miss out on selling my house? Is the market going to crash? Is it too late to sell? So I believe that whole thing, the whole fear and the whole emotion is actually going to be taken out of the buyer's market. Not yet, okay? It's still a toxic seller's market. There's still fear of missing out. But as we go into 2022, you guys, that's going to shift to the sellers. Mark my words on that. So as the fear and as the desperation leaves the market, a lot less people are going to be going crazy. And I look at those people as the people from out of state or the people that are migrating or the leveled up buyer that has just sold their house and is throwing a whole bunch of money at a new house. So overall, you guys, those are the 6 things total that I wanted to outline: 3 on demand, 3 on supply. Now, here's my opinion. Essentially, I don't think that this is going to be a cool down because I believe that there are too many factors that are attacking us. And I also believe that the biggest problem is the bubble got too big. Because the bubble got too big and that topped with a recession, I think it's going to crash. I think it's going to burst, you guys. If we didn't have year after year after year of double-digit massive equity growth, we wouldn't have a bubble. But the fact that the house equity appreciation broke market fundamentals, that's one of the definitions of a housing market bubble. And the fact that a recession is right around the corner, which could devastate the job market, that's a pop to me. If we didn't have a recession around the corner and if house prices didn't go up year after year after year, double digits like that, I think that we could actually get away with a cool down. But because of the massive equity growth, because of the recession, I think there's going to be a crash. I think there's going to be a pop. We have this beast of a housing market right now that was artificially inflated by cheap money, stimulus, and lockdowns, okay? So that's why I think it's going to pop. Now, when do I think that's going to happen? That's the magic question. And the beautiful thing about doing these videos and getting this data is I can constantly tighten up my opinion, but my opinion stands. I believe that the end of this year in 2022, we're going to start seeing signs. We're going to start seeing signs of a housing market crash. But I believe the full-scale crash is going to begin in 2023, possibly bottom out in 2024. So here's the thing, you guys, as we move forward, we're all going to find out if I'm right. But that is how I'm preparing my life. I am preparing to purchase at the end of this year and into 2023, possibly into 2024. I plan on getting a couple houses because real estate traditionally is a really awesome thing to own, and renting is traditionally horrible. But we're under a rare situation right now where I would actually recommend people rent. But anyways, you guys, I hope you saw my debate. I hope you saw the case that I try to lay out for you guys. Demand is going to go down. Supplies are going to go up because of all of these crazy factors like massive equity growth and a recession. I believe it's going to be a pop starting in 2022 at the end and really getting out of control in 2023. But as always, you guys, I want you to be patient. Don't rush the biggest investment of your life. Don't get desperate. Just stay patient, okay? I believe you're going to make a lot more money staying patient than rushing out there buying something that's overpriced. Now, if you guys are investing, whether now in 2023 or 2024, I wish you luck and I hope you win.